Anything else, guys? No? Quickly, I know went over time, but is there any deals that you guys want to talk through? Any questions you have about, kind of like what Hannah had regarding the HOP program?
I have a quick question. What are your thoughts on instead of charging origination, you just charge points instead?
Sorry, instead of origination, just charge points instead.
Yeah.
I mean, I don't think there's a right and wrong. I will say this. I don't know if this is going to help you. I would say about 95% of my loans that I do, I don't charge origination or points. I only work off the rebate.
Okay.
That's just that's just how I work. I'm not saying it's right or better. Peter, I don't know how Peter does it, where he charges everything. Every bucket is full. But you're probably right. It really depends on the borrower you're dealing with, and this could be a separate training. I know we kind of had one in the past, but it was done a little bit quickly. But for me, my thing is I don't like showing that we're expensive. And when I say expensive, I mean I don't like showing the upfront cost of things. I was taught that way. So even my clients, like even this pastor right now, right? I'm disclosing everything though. $2,000 origination, $695 admin, $1,595 underwriting, $995 processing. But I'm doing that also to show him that I'm going to waive it all, right? So that's a strategy that I use. I know it's a little bit more work from our processing team, but I'll show it to show, hey, these are what the fee is to work with Giving Tree. But for you, I'm going to waive it, right? So I know I'll waive it all. In other cases, I'm only showing the underwriting and processing. That's it, because those are the two fees that we have to collect. But a part of that is to show them, hey, I'm not that expensive. Like there's other lenders that are charging this and this and that, but I only charge the standard underwriting and processing fee, and that's it, right? And I'll try to make all the money up. I'll make my portion on the back end. So I don't think there's a right and wrong. I just and I don't even think there's a good or better or worse. It just really depends, I think, on your client, and two, how you want to conduct it. Because the argument now could be, oh, Alex is the guy, he's good. He sells good rates, but man, he has like heavy upfront fees. It might work for your platform. It won't work for me and my platform when I'm dealing with offices, real estate offices, right? Because the last thing I need to hear or the word needs to get around is, hey, Wagner's good, but man, Giving Tree's upfront fees are hefty. There's $2,000 origination. There's $695 as an admin fee. There's $1,595 this, and that. That's not what I want out there for my reputation. Again, I'm more local here, so please keep that in mind. So I have to work that way. I don't know if that helps you, Alex, or answers your question.
It does. Okay. Makes sense. Makes a lot of sense.
Thank you. Hey guys, anything else?
I have a quick scenario, if we have a minute.
Yeah, go for it.
So I have a borrower. They own a construction company. They have probably about 150 grand reported in W2 income from an S corporation. They have no employees. It's just the two owners getting paid through W2. So technically speaking, the file would end up being considered self-employed even though they're W2, right? Because they're just the two owners on an S corporation.
Correct.
So I'm trying to refinance one of their properties out of state as an investor deal and pulling some cash out. Some of the lenders I've talked to, they're like, well, we don't need W-2s, just give me the last year tax return. And so I'm trying to figure out how to structure it, because most lenders just consider this borrower as self-employed, even though I have W-2s and pay stubs to provide. Which route would you guys go? Because after this, I'm gonna help them buy a primary home, but we need to cash out from an investor property out of state first. Income wise, I'm trying to figure out, because I was ready to review their pay stubs and all that, and most lenders are not even asking for it.
Okay, so if I understand you correctly, this subject property is a rental, correct?
In this scenario, yeah, it's a rental property. So I've explored anywhere from DSR programs to full doc. But I noticed that the full doc programs, they just want last year return. They don't even ask for W-2s or pay stubs.
So it's understandable why they won't request W-2s and pay stubs, because once you're self-employed, it's really tax returns, and the tax returns are going to have reflect the wages that they earn themselves. So that I don't see as a, like, you don't have to read into why, but as far as which route to go, I mean, if you are preparing your clients to purchase another primary, off the top of my head, I would think my first train of thought is you want to get them on a cash out with the lowest rate possible. Like, you're not really going to entertain the programs with the higher rate, because you still have to qualify for them for a primary residence, right?
So that's going to be a hit. I mean, at the end of the day, if what we're going to try to do is the payment's going to actually be offset by the rent.
Okay.
So that way they don't take a hit on future purchases. But
right.
But yeah, you're right. Ultimately, I should be entertaining lower rates first if I have tax return. But so it's more like a given. If somebody, because I didn't know the level of how, if I see a W-2, I immediately think, oh, okay, so we're going W-2s and tax returns and pay stubs, right? But then they're like, oh no, there's another layer to it. They own their own company, so we just want to see the business returns and the personal returns, or maybe just the personal returns, but they get K-1 income as well.
Okay.
So, but for me, it was a little bit confusing. But now you're saying every time you have a self-employed individual, it's always going to be tax returns.
Yes, correct.
But then the fact that they're on payroll and we have pay stubs year to date, but they don't care to see them. Or unless it's the one lender I talked to that they're like, well, I don't need pay stubs, I don't need any of that, I just need the last year return. Is that normal, or is that varied by lenders when you're dealing with business owners that own a corporation and they get a W-2 from their corporation?
No, I mean, generally speaking, if you're self-employed, no, you do have to provide W-2s and pay stubs. Brenda, you could confirm that, right? But if he's only asking for the tax returns, I mean, that might just be some type of streamlined non-QM product he's trying to work off of. Yeah, but I see what he's saying though. If the bar, okay, let me ask you this. You said that the business doesn't have any employees, right?
No.
Yeah. So off that tax return on the expense line section will already have the wages paid out to partners, and any wages paid out to employees will be all added back because they are the only employees. Yeah.
So, so they take like a base, every year they take a base salary, and, then they take K-1 distributions at the end.
Yeah. The K-1 is not gonna, I mean, the K-1 is just gonna be the net business profit. So, I mean, while it's needed, Yeah, you can work. You could theoretically, to answer your question, Freddie. Theoretically, you can work off of just a tax return to calculate income.
Okay.
In this scenario, because the two people are the owners of the company and there's no other employees.
Nope.
Yeah. So in theory, you can work off of just the tax returns. But Brenda, confirm this. DU will always require the W-2s and pay stubs, though, regardless, even if you're 100% owner with no employees, no?
Yeah.
Yeah. Yeah. So, yeah. So I'm not sure if this lender is just trying to see the cash flow right now based on a tax return first before he gives you a. I don't know. I don't know what their intent is there.
Got it.
Yeah.
So it would be, I mean, I'm saying I should expect that most lenders will ask for year-to-date pay stubs.
Lenders will ask for yes, because we don't know if that year to date has changed. But actually, with self-employed, it doesn't matter. You don't even need a year-to-date pay stubs.
With that, okay. So
Yeah.
now you kind of put me back to that.
Yeah.
Okay, so all right. Well that kind of makes some sense right now. So
Okay.
what do they ask in something like that to make sure that there's continuation of income? If they're self-employed, what do they want? Like a profit and loss statement year to date, or
For continuous income. So when you're self-employed, the guidelines, I'm a little hazy on that one, Brenda. You might have to help me. Usually they ask for bank statements to show that your business is currently active. They're not looking into the probability of future income, though. That's the scary part.
Usually they
you ask
just
me.
take a CPA letter confirming that the business is active, and if it's like a purchase and they're using funds from the business, then that's when they ask for like that there's no negative impact using the funds from the business. But usually to confirm that the business is active, they'll just take a CPA letter. Obviously, they take the license, they'll do their own California. If it's in California, they'll do their own California business search, make sure that the business is active as well.
Yeah,
So
but to Freddie's question of future business, right?
well, we're in 2025, right? So I give them 24 tax return. Everything looks great. Number is good. DTI is good. But will the lender, I mean, for a normal wage earner, employed at a given company, they would want earned pay stubs to make sure that income's still there. But for a self-employed individual with the 1 year or 2 years tax returns, wouldn't they look for something, either some of those pay stubs that they obviously receive from their own company, or a profit and loss statement to make sure that the company is still generating the same amount of income for them to draw their salary? I don't know, just my thought.
Yeah, it's usually bank statements, the business bank statements. So if it shows that the business bank statements, like the most recent one shows deposits, then you're good. That's it. That's all there is to it.
Okay.
Yeah.
So personal experience, for this property we bought about 3 years ago. We're living in now. So we have, at the time I had a W-2 and also had a personal business. To Freddie's point, they asked for a P&L up to date.
That was a pandemic overlay.
Okay.
Yeah. So okay, I see. So during the pandemic, Fannie Mae and Freddie Mac, or the agencies, added an overlay which required all self-employed businesses to provide a current P&L. That was uplifted, I think, 2 years ago, if not a year ago.
Maybe that still gets stuck in my head because
I see.
And in theory and commercial lending,
Yes.
It's almost it's not even almost, it's a given that even though you have 3 years of returns provided, you have to show profitability to date.
Correct.
Yeah.
Correct.
Okay. All right. Well, I mean, it's different. I like it.
Yeah. Yeah. I think what I will do though is I'll circle back with both of you guys or all of you guys if a P&L is required after so many months after the new year though. Yeah.
Because we're halfway through it, and so
Yeah. But usually those are just borrower prepared in the past anyways. Yeah. Anything else, guys? So I will get back to you guys on the two things. The bank statement doesn't have to evidence 100% of the deposits for the VOE. And then regarding this P&L. Cool? Awesome. All right. You guys have a great week, guys. Bye.